Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. The chip sell-off extends into Asia, dragging stocks lower. With earnings out this hour, will it be TSMC to the rescue? Another day of U.S. strikes on Iran. President Trump says Tehran wants to talk as the Strait of Hormuz remains blockaded. And divisions in Andy Burnham's inner circle as the UK's incoming prime minister reportedly prepares to name Home Secretary Shabana Mahmood as his chancellor. Good Thursday morning to you all. Let's get a check across the markets. The pictures for equities this morning, as you can see, a rather mixed picture across the board. The MSCI Asia Pacific Index being dragged lower by that sell-off in the semiconductors, down by 1.3% this morning. Looking at the Euro Stoxx 50 this morning, up about 1/8%, up about 10 points. It's heading into that European session. And of course, S&P futures this morning up about 0.1% as well, gaining 9 points in the earliest hours of trading on Wall Street. And of course, watching the picture cross asset, things really sort of stabilizing a bit there in the Brent crude market. Brent there down by 0.5%, down only 42 cents, just below that $85 a barrel value. The U.S. dollar index basically dead flat there this morning, and U.S. 10-year yields calming down just a little bit after that 2 days of testimony from the Fed Chairman Kevin Warsh. The risk events that we've got around this morning, we will find at 6:30, I should say, TSMC earnings. That will be potentially the next big catalyst in that AI trade that we'll be watching throughout the morning. We'll have a lot of analysis throughout the hour. Of course, then we'll have U.S. retail sales a little bit later in the afternoon, and in the earnings report, we're watching very closely second quarter earnings out of Netflix. We begin this morning with the market action across Asia. The stocks in Asia are being dragged lower by semiconductors. Let's get a little bit of a deeper dive there with Winnie Su in Hong Kong. Good morning, Winnie.
We are seeing South Korean stocks leading declines in Asia today, with the Kospi here down more than 6% and earlier even triggered a sidecar. Now we have, of course, SK Hynix and Samsung Electronics continue to drag the overall gauge lower, also coming after a weaker session in the U.S. peers overnight, with the ADRs of SK Hynix also slumping by 9%. Now, when it comes to central bank decision, we actually heard from Bank of Korea raising rates first time after more than 3 years and indicating further rate hikes to come on the inflation driven by the AI trade. Now you can see that South Korean won here strengthening slightly and also outperforming the Asian peers. Another key element that's really weighing on today's sentiment in the Korean market is the expectation for the government, for the South Korea regulators to come up with measures on the leverage ETFs because of how these have really driven volatility higher. And you can see we are looking at 30-day Kospi volatility at its record high. Now, these measures, from what we have heard so far, is likely going to include, for example, increasing the minimum deposit to invest in these products, as well as spreading out the rebalancing period throughout the session versus how it is right now done by the end of the day. So we will see how that play out as the announcement comes later this afternoon. Now, flip the board, we take a look at the broader market, because overall Asia stocks under pressure today with losses led by technology shares. But interestingly, we are seeing Taiwanese stocks holding up quite well, with TSMC's earnings, of course, in focus. The expectation right now quite bullish, so we will see how the results can actually meet the sky-high expectations. Another bright spot today is, in fact, in technology shares in Hong Kong, with the gauge here up about 3%, and that is coming after Apple finally got its approval from Chinese regulators that they can be launching their AI features called Apple Intelligence for iPhone in China. Now, that is also in collaboration with the likes of Baidu, and that's why we are seeing shares in Hong Kong trading higher in that area. Back to you, Ollie.
Well, Bloomberg's Winnie Su, thank you so much for the wrap of the market action. But of course, what we're watching very, very closely is Asia's most valuable company, TSMC. They will report this hour. It'll be watched very closely as a crucial test of whether the AI spending can keep boosting those record highs against the chip sector. We're very pleased to be joined by Bloomberg's chief North Asia correspondent, Stephen Engel, who joins us from Taipei, where he'll be listening to and possibly grilling some of the executives over at TSMC. So listen, Stephen, a lot of anticipation built into this. What should we expect?
Yeah, I mean, the bar has been raised, obviously. The markets were looking at ASML last night, and the reaction on the markets was a bit meh, even though they, for the second time this year, raised their full year net sales outlook. They talked about increasing capacity for its extreme ultraviolet lithography equipment by 30% next year, and possibly even another 30% the following year in 2028. They talked about, according to the information reporting, that they might even raise prices. So they were quite bullish based on the channels of communication they've had with their customers. And guess who their number one customer is? It's TSMC, the biggest foundry in the world, chip foundry. So we're going to be looking at that in the room behind me in about 25 minutes time is when the second quarter results are out. And, they've already increased, or reported their sales outlook in the second quarter. They reported 36% increase in sales, 68% increase in June alone. So the expectations are pretty high that that's going to translate to a pretty good number on the bottom line when they report that in just a few minutes.
Yeah, and Stephen, you point out that crucial relationship, of course, between ASML and all of the semiconductor manufacturers, especially TSMC. And we've had that news out from ASML yesterday that Intel is looking at buying the more expensive machines that TSMC initially was perhaps less keen on because they thought they were too expensive. Is that going to change? Is TSMC going to end up spending more money here?
Well, that's the big question, right? So they're going to be laying out, they've already guided that they're going to lay out about $58 billion this year, for capital expenditures. UBS, for one, has talked about that could go as high as $60 billion. Now, if ASML is going to start raising their prices, I would assume TSMC and the like are going to resist that, but that could mean more, pressure on those margins. But the margins have been doing pretty well. We've heard from Bloomberg Intelligence talk about gross margins could be upwards of 67.5% at the high end of the given range. What we're hearing, it could even be higher. But again, there are those cost pressures as well. If the lithography equipment, these gigantic bus-sized machineries are going to be increased in price, you're also going to have 2 nanometer technology ramp up. There's costs associated with that. There's also international expansion in Kumamoto, Kyushu, Japan, and also, of course, in the United States, in Arizona. So all of this, we need that kind of guidance from the top leadership in the matter of minutes here in Taipei.
Right. So, Stephen, we've sort of dealt with the revenue side. We've dealt with the money that's flowing out, the capital expenditure. What else are you watching this morning?
Well, we're going to look at, see if, the pressure, if you will, and the demand, because again, memory chips, they've been really going into the higher profile or higher prioritized equipment, the data centers and the big AI spend. It's been a bottleneck, of course, with the slowing demand in, for example, Android smartphones, also PCs. So we're going to have to see whether the AI demand overwhelms really the downside on the PC side and the smartphone demand, which are both diminishing. And again, we just need to get a clearer picture of what the end customer demands are going to be longer out, maybe into the next year and beyond.
Well, Bloomberg's Stephen Engel, thank you so much. And we'll be back with Stephen in about 30 minutes' time to break down the numbers once they cross the wire here. Stephen will also be speaking to the TSMC CFO, Wendell Huang. Catch that in conversation on Bloomberg Television from Monday. But now in the earnings story, before we get TSMC, we now have the Swiss-Swedish giant ABB crossing the wire right now. This is, of course, the company in electrification, a giant in electrification, in mobility, and, of course, in automation. We see that they've got their operating margins coming in at 20.2%. That beats the estimate of 19.9% that we had been anticipating. Looking at the order flow, also looking very solid there, coming in about $12 billion. That is beating the estimate of $10.5 billion. But something we're also watching very closely is some M&A out of ABB this morning. They say that they are going to buy a FTSE 250 listed company, Rotork, and that shareholders will get a dividend of up to 3 pence. They're going to pay a premium of about 60% for this business. And Rotork is a global manufacturer of mission-critical flow control. They primarily design and produce valve actuators and gearboxes. So for those of you rescue, really in the weeds there for the engineering side. We'll be watching very closely. And of course, we'll be watching Rotork very closely at the open, expecting a relatively large move on that. And we'll be speaking to the CEO of ABB about the earnings, about the M&A a little bit later on the show. That will come at 6:30 UK time. Well, the United States has completed another round of attacks on Iran that it says were intended to degrade the country's ability to attack ships in the Strait of Hormuz. President Trump has pledged to intensify bombardments, claims Tehran is seeking more talks after the U.S. degraded its missile and drone capacity. For more, we're joined now by Stuart Livingston-Wallace, our executive editor for the Middle East, North Africa, and Russia. So listen, Stuart, another day, another set of strikes. I mean, how should we interpret these? I mean, we're still in the phase now where the United States is beginning and ending the strikes rather than having it be a sort of continuous flow. What does that tell us?
Yeah, morning, Ollie. So, yes, I mean, it's exactly right. It's largely the same playbook that we've seen over the last several days, arguably the last several months. You had a very, very intense couple of months after the war began, but we're now in a very different phase. And I think the big concern is that we go back to that incredibly intense bombardment from both sides that we saw in March and in April. So far, the US is targeting largely coastal military installations. There have been a few others, but that's broadly what it is. That is specifically aimed at Iran's ability to threaten shipping. And it is highly questionable how effective that can be. Yes, they can degrade it, but when you think about the kind of weaponry that the Iranians are using, largely it's drones that, you know, pretty much you can build in a garden shed and they don't cost very much. So quite how you take all of that out seems very hard to see. And then from the other side, the Iranians have been going squarely after US military installations in the Gulf states, but also as far afield as Jordan. Again, I think both sides are signaling that they don't necessarily want to escalate. Quite whether that works out, I mean, the rhetoric is starting to change from the White House, so that's something we'll keep an eye on.
Yeah, but I mean, on the question of how to actually escalate here, I mean, there's not really a way in which the Iranians can escalate other than just sort of defying the Trump administration. We're trying to sort of see what the catalyst is going to be going forward here. But I think the real question, Stuart, and I don't know how the United States is interpreting this. There's reporting out from the Wall Street Journal that Trump is apparently considering expanding the military operation. What leverage does the United States have on Iran right now?
Yeah, I mean, there have been those sort of reports for some time, and there's no doubt that's going to be discussed. I mean, you would think any, rational player in this was going to be exploring its options. That doesn't necessarily mean it takes those options, because here's the real risk. If the US decides to escalate and they go back to bombings, cities in Iran, civilian infrastructure, that sort of thing, then we know exactly what the Iranians are going to do, because they've already done it this year, which is they're going to respond in kind, and they're going to start going after civilian infrastructure, energy sites, power plants, that sort of thing. So it seems like it's a difficult decision to make, because Iran is signaling very clearly that its pain threshold is significantly higher than the US and certainly the Gulf states in terms of the damage that it's willing to take and in terms of the economic punishment that it's willing to take. At some stage that may run out, but there's no signs yet that Iran's anywhere close to capitulating on any of the key demands that they're making.
Well, Bloomberg Stuart Livingston-Wallace there joining us from Dubai. Thank you so much for keeping us across that fast-moving story as ever. Coming up on the show, we will take it from the Middle East to Ukraine, where the government is reshaping its top team as Russia faces fresh sanction pressure. We'll have all the details next, and this is Bloomberg.
He wants to be careful about the way he deploys this kind of leverage. Geopolitics are very fragile, and this is something, whether it's a tariff action or sanctions action or anything, it's something that the president thinks about very carefully. He certainly talks to me, he talks to Secretary Besson, Secretary Rubio, Secretary Lutnick. He talks to everybody. He talks to people outside the government. He wants to hit the right spot of putting pressure on countries and putting pressure on Russia without creating more conflict or reducing the likelihood of a peace deal.
The perspective there of U.S. Trade Representative Jamieson. Greer speaking exclusively with Bloomberg about the Russia oil sanctions bill, signaling Trump would deploy that leverage very, very carefully. Let's get a little bit more with Tony Halpin, who leads Bloomberg's Russian economy and government coverage. Obviously, Tony, there's a lot of different threads coming all together on this Ukraine story at the moment. I'd like to just start where we were there with Jamieson. Greer and the options that the President of the United States is considering. Since we last spoke, we have a clear idea of what is in this sanctions package. How effective could this be should the U.S. deploy it?
Yes, the bill would give President Trump the powers to impose sanctions of as much as 100% on countries that bought Russian oil. And as the commentary noted, that's a very delicate issue for countries like India, for example, which gets more than half of its imports this month so far from Russian oil, and there's a clear squeeze on global supplies because of what's been going on with the Strait of Hormuz. So there are countries that will be fearful of that. In the past, though, President Trump, because of what's going on in the Middle East, has allowed sales of Russian oil to go ahead. So it's not clear that that power will be immediately imposed, but it's clearly something that would hang over the Kremlin and would concern them.
And thinking also about the domestic situation in Ukraine, we now have the announcement of the new prime minister. We have the defense minister now stepping down. Can you give us a little bit of an examination of this reshuffle and put it in the context of the war?
Yes, President Zelensky in Kiev is trying to prepare his government and his country for winter. They're very anxious to avoid a repeat of what happened last winter when Russian strikes on energy infrastructure left millions of Ukrainians in the dark and without heating for long periods. So the focus of the new prime minister who's coming in, a man called Serhiy Koretsky, is very much that to prepare Ukraine, for winter. His background is as the head of an energy company in Kiev. But there's controversy also about the replacement of the defense minister, a man named Mikhailo Fedorov, very young, 35, very energetic. He's been largely credited with the strategy of deploying drones very effectively in recent months to help Ukraine push back Russia. So there's some concern clearly in Kiev that his replacement might mean that there's a watering down of that commitment and that it will be less effective than it has been.
And on the subject of drones and how effective the Ukrainian drone warfare has been, I mean, there's been a lot of reporting around this, but when we hear it from the director of the CIA, I think we really need to pay attention. And this is what we heard from John Radcliffe saying that the average life expectancy of a Russian recruit right now arriving on the battlefield in Ukraine is estimated to be between 20 and 30 minutes. Tony, explain to us how this war can continue for the Russians at this pace. We're seeing numbers from the CIA saying that the Russians are losing 7,000 people a week. That's 1,000 people a day.
Yes, and that's the essence of Ukraine's strategy, really, that they're trying to increase the number of Russian casualties faster than Russia can recruit replacements. And just as a context of how dramatically drones have transformed the battlefield, in the Battle of Stalingrad, the average life expectancy of a Soviet soldier was about 24 hours at its peak. So now that you can see in Ukraine on the battlefield there, 20 to 30 minutes, it just shows how intensively drones are applied to this battle space and how difficult it is to survive in this new era of warfare.
Well, Bloomberg's Tony Halpin, thank you so much for the latest on the war in Ukraine and, of course, that domestic government shakeup from President Zelensky. Well, coming up, incoming UK Prime Minister Andy Burnham says he is eyeing the current Home Secretary for the Chancellor's job. We'll have more on that next and some of the divisions that is creating within the Labour Party. This is Bloomberg.
We have a softish economic outlook. We have slack in the labour market. Those two things mean that shock is less likely to become embedded and lead to inflationary dynamics. And so we've had a tightening of financial conditions. And I think in combination, that means we're in a good place to monitor very carefully what's happening. Of course, if it's clear that inflationary dynamics are becoming embedded, we'll act.
The words there of the Bank of England Deputy Governor Sarah Breeden speaking exclusively with our very own Francine Lacqua. Well, the incoming UK Prime Minister Andy Burnham is reportedly set to name Home Secretary Shabana Mahmood as his Chancellor. This, according to reports in newspapers, including the Financial Times. Let's bring in Bloomberg's opinion columnist Rosa Prince. So listen, this has obviously been a very sort of highly anticipated selection by the incoming Prime Minister. Why has he chosen Mahmood over his old friend Ed Miliband, who had been tipped for the role? Was it all about the market?
I think it was, yeah. Ed Miliband would have been his first choice. They are old friends. They go back a long way. And also Miliband has really helped this quite tortuous path for Burnham to return to Parliament and topple Keir Starmer. The problem from Miliband's point of view was that the markets just didn't like him. They saw him as too left-leaning. There was some also disquiet among trade unions, actually, about his approach to jobs, given that he was an opponent of drilling in the North Sea. Shabana Mahmood seen as much more favourable. Burnham barely knows her. She wasn't an MP the last time he was in Parliament, but he's gone with her. And I think that really sends a signal both about his economic view, but also about his pragmatism. He was not prepared to upset the markets, and he's gone with the safe choice from that perspective, even if it might not be his personal choice.
Right. So will the markets actually be an active fan? What do we know about Mahmoud's approach to the economy?
So far, they seem to like her. The pound has gone up. She is seen as on the kind of centre right of the Labour Party. So, yes. On the other hand, Shabana Mahmood is not an economist. She has not had a lot of experience at the Treasury, unlike actually Ed Miliband, who served on way back under Gordon Brown when he was that very strong Chancellor. So I think really the reason the markets like her is because she is seen as also a kind of pragmatist. She's on the blue Labour wing of the Labour Party. That's a group who are kind of more socially conservative, but perhaps more economically liberal. And I think it suggests that this government will kind of continue the path it had been on under Rachel Reeves, who was quite unpopular with voters, but again, popular with the markets.
Right. Well, Bloomberg opinion columnist Rosa Prince, thank you so much for your analysis this morning. Let's get to some of the other news that we are monitoring this morning. JP Morgan CEO Jamie Dimon is warning that the risk of making sophisticated AI system like Anthropic's Mythos model widely available, comparing it to a ballistic missile. Rapid advancements in AI have both businesses and governments assessing potential threats. The issue took on more urgency after Anthropic said its Mythos model is so good at finding software vulnerabilities that it cannot be released to the general public.
Mythos, that's a real issue, which I know our government is on top of at this point. It's not to stop, small banks from gaining stuff. It's really just to make sure when we roll out this stuff that we know is being controlled, because you're giving ballistic missiles to individuals with Mythos, basically.
And Bloomberg understands that Anthropic is seeking to meet investors ahead of its potential mega IPO. Sources say banks leading the offering are scheduled meeting with investors and the company in the coming weeks. Bloomberg earlier reported that Anthropic is considering an IPO as soon as October, putting it ahead of rival OpenAI's potential listing in 2027. And Nvidia founder Jensen Huang says his company's next-generation AI accelerator systems are in production and on track for delivery to customers. He was responding to reports that manufacturing snags may delay its rollout.
Not true.
Are you still on track? Can you confirm
we're on
that?
track. Completely on track. Not true.
Okay, so Tehran has the chips supply chain.
Yeah, Vera Rubin's already in production.
Okay.
Yeah, giant amounts of production coming.
So those are some of the corporate stories we're watching. We're watching another corporate story after this break. We will be speaking to the CEO of the Swiss industrial giant ABB just on the day that they have now announced their biggest ever acquisition. We'll have that interview in just a few minutes. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. The chip sell-off extends into Asia, dragging stocks lower with earnings out just crossing the wire. Will TSMC come to the rescue? Another day of U.S. strikes on Iran. President Trump says Tehran wants to talk as the Strait of Hormuz blockade drags on. And divisions in Andy Burnham's inner circle as the UK's incoming Prime Minister reportedly prepares to name Home Secretary Shabana Mahmood as his Chancellor. Let's begin with the markets this morning, about 30 minutes into the show here, just ahead of the European Open. You can see the MSCI Asia Pacific Index actually diminishing some of the losses we saw earlier this morning. We were down over 1%. We're now down just by about 0.7%. Euro Stoxx 50 this morning up by about 0.4%, and S&P futures gaining a little bit there, up about 0.1%. When we take the picture cross asset, here is how things look. Looking at Brent, which has managed to sort of stabilize over the last day or so, still there just under $85 a barrel, down by 52 cents this morning. The U.S. dollar index basically dead flat, and something very similar for the picture of U.S. yields. 10-year Treasury bringing you 4.55 this morning. Let's get straight into the sort of event we've been waiting for all morning, and that is the earnings out of TSMC. We've got only a couple of lines that have crossed here, just the very top line. Their net income line coming in at 706 billion Taiwanese dollars. That is beating the estimate of 625. So again, we're seeing a beat there at the very beginning. The gross margin, a slight beat there. It's coming in at 67.7%. The estimate was for 67.1%. We're going to watch as we get more lines that cross out of that important earnings report this morning, and we'll be speaking with Stephen Engel very shortly for his analysis on these numbers. Of course, we're watching the space very, very closely after we got those numbers out of ASML yesterday, and getting a little bit of tension there between TSMC and ASML. TSMC reportedly pushing back against trying some of the price hikes that ASML is trying to put forward on those ultraviolet lithography machines. But another story that is being affected by the AI trade is the Swiss industrial giant ABB has agreed to buy the British industrial components company Rotork in its largest ever acquisition. So a lot of M&A. We've also got a lot of earnings out from ABB, so we got to break this all down with the CEO. And we're very pleased to be able to do so now. Morten Wierod, who joins us now from Zurich. Thank you so much for joining us this morning. I'd like to begin with this acquisition. It's the biggest in your history. Put this in the context of the broader story and the ambitions here for ABB.
Yeah, we are in good market for electrification and automation at ABB. That's where we play. And we believe Rotork is a very good addition and scope expansion in our automation portfolio. We're strong in what we call sense, control, and act control loop. And this goes into the act part with the electric actuators, where Rotork is a leading company in that field, both a technology leader, a market leader, and a high-performing company. We think it will be a really good addition to the ABB automation portfolio.
And thinking about the other sort of possibility for inorganic growth for ABB, I'd like to get your sense of where you're looking for other acquisitions. What parts of the business? Is it going to be in motion? Is it going to be in electrification? Is it going to be in automation? That'll be the first part. And then secondly, where are you looking geographically?
We're taking a wide view here. We are looking at every area where we operate, where we believe there are good markets with good, interesting profit pool. That is kind of the high level where we're not limiting ourselves here. This one today with Rotork, we're talking about the automation offering. We're also done several acquisitions, some smaller and mid-sized one, both in motion and electrification. So M&A is happening really across the board. It's where it's good value creating deal for ABB. That's kind of always the highlight and the center of attention for us when we're doing M&A.
And given the sort of tailwind that you're feeling thanks to that electrification and that AI trend, do you feel some pressure to do some M&A? Do you feel that this is the sort of right moment you need to get ahead with that? And how much cash are you willing to devote to these acquisitions?
Yeah, as ABB, we are in a very strong position today with a strong balance sheet. So we have the opportunity when we want to do M&A, we can do it. But it's always about value creation and when we find deals that we believe strengthen the portfolio, strengthen the offerings that we can support our customers better, and when we can be a better owner for those kind of companies. When there is a good fit, then we are ready to act. And we have a strong balance sheet. We've said earlier about $13 billion available. And so that's we are in a position that we can do more, but it's all about value creation. When the time is right and we have a good fit, then we will act as well.
Are there any good fits in the United States?
Sorry, could you repeat that?
Are there any good fits that you're talking about there for M&A in the United States?
Absolutely. I mean, we have done several acquisitions in the United States. We deployed more than $11 billion over the last 10 plus years in the United States. And the last one was GE Industrial Solution that we acquired back in 2017-18. So, and we're doing that also when we're looking at when we're building a pipeline. So we're not limiting to Europe, to Asia, or US only. We're really looking across the board here for good fits with the ABB portfolio and where we see strong market growth.
And of course, data centers and electrification have been a big part of the story, the growth story for you over at ABB. What is your outlook for that over the next 6 months? What is your outlook, and how sort of vulnerable do you think that outlook is to a sort of a sharp reversal, just given how fast we've been moving in this market?
Yeah, the data center is the fast growing segment of ABB. Last year, it accounted for about 9% of our company revenue, but it is growing in the first quarter and in the second quarter more than 100%, almost triple-digit growth. So it is fast growing, but also when we talk with customers, so our large customers, the pipeline is very strong. Also, so the outlook in this sector for the next quarter and years is very strong. So, and we are well positioned to capture that growth. But as I say, it's a 90%, which is not data center, and but we have a great benefit there. But the whole trend of electrification and automation is really driving the performance of the overall company. So that's what also the non-data center business grows more than double-digit in the electrification business, as an example.
Yeah, but so 2 quarters of triple-digit growth. It means you've also increased your guidance yet again. How long do you think that can last?
We are, as I say, the whole trend of electrification of everything. That's a long-term trend. Power grids need to be expanded. We need more power, and we need more energy efficiency as well as power gets more kind of both more expensive and more tight. So this is a really good long-term market trend for ABB. That's why we increased our guidance for the year. But also looking beyond that, we are in very strong markets, and we are very well positioned there. So I always say that the best is yet to come for ABB, and that status that holds very well.
So that's some sort of the positive news. I want to talk to some of the risks to the outlook. We obviously have some of these conflicts around the world that are creating a lot of sort of instability, not just geopolitically, but also, for example, on inflation, on what's going to happen with rates. How do you anticipate that sort of rate story and the possibility of inflation might impact the outlook?
Yeah, we will have to deal, I think, as a global economy, we'll have to deal with inflation as higher energy prices will spill over, and also higher risk profiles in some of the markets will spill over at the inflationary level. And as usual, that means that we need to deal with that on pricing on our products. That is what we have done in the past and what we will have to do again. So we will see some more pricing effect to be able to compensate for that inflation that is very likely to happen now in the second half of the year, and also looking into 27, because energy is a big cost factor for every company.
And I also want to get your perspective on China, because we got some growth figures out of the nation this week that were a disappointment. They were below the sort of target range for the Chinese government. And I noticed when I look back at your sort of the proportion of your revenue, China is making a smaller and smaller proportion of that. Is that a question of the weakness within the Chinese economy or increasing competition within that market?
Now, if you look at our numbers in China, we were up 10% in the second quarter. It is really driven by this trend of electrification that we also see in China. More renewable power generation, but also much more data center. It's the same trend we see there as we see in other parts of the world. And ABB were well positioned also in China to capture that growth. So even though the residential market is tough, but when we look at other areas, both in discrete manufacturing, but also and in the whole data center power grid expansion, that is going well. And you have to remember that China's export is growing strongly. It's more the domestic demand that is kind of being challenged. The export is strong, and we are often part of that export journey for Chinese EPCs when they are working overseas or in neighboring countries. That's also a big part of our business and how we support locally, but also that exports business.
Morten Wierod, CEO of ABB from Zurich this morning. Thank you so much for your perspective, obviously on that biggest acquisition in the company's history, but of course a big part of the AI picture, and he's seeing for the last 2 quarters triple-digit growth in that sector. And of course connected fundamentally to that story is TSMC, which has reported second quarter net income that has beat estimates by a significant margin. Let's get back to Stephen Engel in Taipei. Stephen, you have seen the numbers now. Give us your takeaways.
Yeah, I mean, there were already pretty lofty expectations for these results. What people were looking for is whether they did not meet those expectations. They've done the opposite. They've surpassed it handedly. We're seeing net income of 706.56 billion new Taiwan dollars. If you don't know the math in the equation for the conversion, that's 22 billion US dollars. The expectations was for about 19.4 billion. So it's a significant beat, I should say. Actually, revenue was much higher as well, basically reaffirming that 36% increase in revenue that in those numbers that we got a couple of days ago in the second quarter. We're also seeing gross margins outperforming. Gross margins for the quarter was 67.7%, operating margins at 60.3%, net profit margins at over 55.5%. Again, we were looking at these numbers quite closely to see if any signs of the AI spending build out was coming to a head or was coming to a halt and was going to cast a further pall on these semiconductor stocks that we've seen of late. Keep in mind, the companies in this space, like Samsung Electronics, saw a 19-fold increase in profit, yet the shares have slumped. ASML overnight raised its full-year net sales outlook for a second time this year. They also talked about adding capacity of 30% next year, and maybe even another 30% the following year in 2028. Its stock essentially went sideways. So again, this should give a bit of a boost to the sentiment in the AI space right now. It is the biggest customer of ASML. It is the world's biggest chip foundry. So it is a bellwether in good times, and we're going to likely get the comments from C.C. Wei, the CEO, and the CFO, Wendell Huang, coming up in the matter of a few minutes here in Central Taipei at the press conference.
Yeah, that's right, Stephen. So, I mean, you go through a lot of the sort of breathtaking number we saw in the rearview mirror there in the last quarter. Now, looking into the outlook, when you're going to sit there in front of me hearing the C-suite, you'll be speaking to the CFO a little bit later. What are the most important things that you and the market need to learn from this executive team?
Yeah, we need the vision going out further. We need to know how much they're setting aside for capital expenditures. They already gave guidance for this year of some 58 billion US dollars. UBS has talked about that number could eke upwards of 60 billion dollars. So that's really what we're looking at. And also how the margins are holding up, and if not exploding, if you will. The margins are looking good, but there are some margin pressures. The news we also got from another media talking about ASML with its good set of numbers, talking about possibly, this according to the information, raising its prices for its EUV big lithography boxes, if you will. That would put some pressure, no doubt, on its biggest customer, TSMC, which is already showing some pushback to absorbing those price increases. But also, they're building out, TSMC is building out in Arizona. They're building in southern Japan. There is going to be some margin pressure possibly. So any kind of guidance on that front is going to be welcome, as well as the areas of tech that are being less prioritized right now. We're talking like Android smartphones and demand there, and also, of course, PC demand, which has been weakening.
Well, Bloomberg's Stephen Engel, thank you so much. We'll let you get to that press conference and that important conversation hearing from the management of TSMC. Thanks so much for your coverage today. Well, coming up, the United States Trade Representative tempers expectations ahead of September summit between the presidents Trump and Xi Jinping. More on our exclusive interview with Jamieson Greer. That will be next, and this is Bloomberg. The International Energy Agency has warned that China's rare earth export curbs could put a $6.5 trillion of downstream production outside of the country at risk every single year. It's called for a multilateral stockpiling to guard against that very risk. The United States Trade Representative says the issue remains an absolute top priority. Jamieson Greer spoke exclusively to Bloomberg at the Aspen Security Forum.
So China's compliance with the rare earth elements of our agreements, it's not perfect. I think everyone knows that. You can read that in the paper. That being said, we are getting a flow of rare earths. We don't have factories shutting down because they don't have it. But again, we really want to be in a position where we were, in 2024 and 2023 in President Trump's first term, where we had a regular flow of rare earths. We also know that the Chinese, they use rare earths for economic coercion. They did it in 2010 and 2011. They're doing it now, so it's not necessarily surprising. But we're continuing to have some flow, and where we have gaps, where we have problems, the Secretary of the Treasury and I, we work with our counterpart in China to try to loosen that flow up. Sometimes we're more successful than others. One important thing is we're moving forward in the U.S. on rare earth production. One of the things I'm doing on my trip out west here, I'm going to Utah to visit a facility where they've discovered rare earths in the Utah desert, and they're refining them and further manufacturing them at a facility in Utah, which is a great development for U.S. national and economic security.
You've got rare earths. There's huge pharmaceutical dependence as well. And I wonder how you're thinking about that, the way that you can kind of curb our reliance on Chinese pharmaceuticals and ingredients.
Yeah, we think about this a lot. This is really critical, because at the end of the day, if somehow you lose access to Chinese inputs, it can be a huge challenge for our own manufacturing base. And some people will say, well, what about India? Fine, but a lot of the inputs that India uses also come from China. One great thing that we're seeing as we try to encourage companies to reshore is we actually have commitments from 17 pharmaceutical companies, the largest and the most major pharmaceutical companies, not only to lower prices of medication here in the U.S. Pharmaceutical prices have gone down by 2.5%. But they've also agreed to reshore here and to manufacture here. And so we have companies like Eli Lilly and Novartis and others actually pouring concrete and superstructures going up in new facilities in North Carolina and Indiana and Southern California.
There's a long way to go until this meeting in September when the Chinese president comes to the United States. But let me ask you lastly sort of how you're thinking about that. You were so integral to the conversations that took place in Beijing. What are you expecting deliverables-wise to come out of that meeting in Washington in a couple months?
Well, the number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. Now, that doesn't mean we don't have issues in the broader relationship. Obviously, we do. China is a big challenge for the U.S. in a lot of ways. But we want to make sure we're delivering stability. There's never been a situation where the U.S. side or even the Chinese side has gone out and said, everyone should expect a comprehensive agreement that resolves all issues. Like, no one's ever promised that, so that's not what we expect. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided. So I think it'll be a moment for stock taking, confirming the relationship, making sure that China's complying with what it's agreed to do. That's really what we're looking forward to in this meeting.
The U.S. Trade Representative Jamieson Greer there speaking to our very own David Gura. Now, the world's biggest hedge funds are zeroing in on a new approach to talent tapping portfolio managers at smaller firms for their ideas. Joining us now is Nishant Kumar. He's Bloomberg's chief correspondent on hedge funds. Nishant, thank you so much for joining us this morning. Tell us a little bit about this sort of strategy, why they're looking now for these for paying for these outside ideas, and how new a tactic this is.
It's not at all a new topic. It started way back in 1999 at Marshall Wace. But right now, industry is at a very interesting place because even the biggest hedge funds cannot hire every smart investors in the world. Not everyone want to join them. They already employ the best traders, but they are also managing enormous amount of money. The challenge now is not just to find talent, but finding enough of it. So that is why alpha capture is becoming this booming rental market right now for talent. Instead of hiring a manager, they are renting the insight. It is faster, cheaper, and give them a wider range of talent.
And so why would you rent out your ideas when obviously the lifeblood of a hedge fund in beating the market is, in fact, those ideas?
Well, for smaller managers, this is partly survival, partly opportunity. Raising money is really hard right now for a lot of hedge funds. Fees are under pressure, and capital is increasingly moving towards the biggest platforms in the world. So the likes of Millennium, Citadel, Dish, or you name it. So selling signals can bring in revenues, visibility, and perhaps there is a chance that in future, after seeing your talent, one of these big giant hedge funds would like to hire you. So that is in the play. It can be a way to stay independent while still monetizing the value of your thinking. But yeah, I mean, it's an absolute delicate balance and a bargain. You know, hedge funds are paid for access to their edge. And edge is one thing a hedge fund is supposed to protect, which is going away in this case.
Right. Well, Bloomberg's Nishant Kumar, thank you so much for your time this morning. We'll have plenty more coming up on this program. We'll be talking about the AI inflation impact. We'll get the view from the Fed after a second day of testimony from Kevin Warsh, his view that inflation is a choice. That's next. And this is Bloomberg. Well, welcome back to Bloomberg Daybreak Europe. It has been a heavy hour for some M&A, and we've got some more crossing the wires now. Uber is offering to buy Delivery Hero for €41.50 a share in cash. Uber Delivery Hero offer is subject to a 50% acceptance threshold and process to tender all of Delivery Hero shares into the offer. You can see probably a bit of that premium already built into Delivery Hero there, which is up by 75% so far over the last 12 months. Uber, on the other side, down by about 20%. So we'll be watching that very closely. We'll have more of that next hour on the opening trade with some very important interviews with some of the CEOs, particularly in the agricultural and catering. That'll be next. And this is Bloomberg.